Hello, this is Eric Lindeen with Zoot Enterprises. Today I'm addressing the question, what alternative data sources can lenders use in an account opening process, specifically for deposit accounts? Well, there are three topics I want to touch on. The first one is the traditional use of debit bureaus. Now, most deposit accounts will use a closed for cause or some type of fraudulent behavior check for data when they're opening an account. Well, in the last 6 to 8 months, we've seen a number of vendors come out with new products that are statistically based rather than based on past behavior. And this opens up a new realm of opportunity where we can actually evaluate consumers that are applying for deposit accounts based on the probability that they will commit fraud rather than only on the historical basis that they have in the past. So using these two types of closed for cause checks, the behavior-based as well as the statistical base, can actually yield a great reduction in fraud risk. The second thing that we see very commonly being used is credit data, and this is most frequently used when we're talking about doing cross-sell at account opening. So thinking about a demand deposit account opening, a DDA or a checking account, it's very common to cross-sell at least a credit card, ideally several different types of loan products at the same time. Again, remembering the greater the wallet share, or the number of accounts we have with that consumer, the deeper the relationship, the greater the loyalty, and the greater the profitability that we'll experience over the life of the consumer. The third category is online device identity, and the idea behind this is to go beyond just the traditional is the IP address from the US and really try to understand the identity of the device that's underlying the transaction. So in one recent example I heard, there was an application for an account that appeared to be coming from an iPhone in New York. Well, on the surface that sounds very legitimate, but upon further inspection what they found is the device was actually a PC, not an iPhone, and the actual true address of the device was actually in Nigeria, not in New York. Well, knowing that it's actually a PC in Nigeria claiming to be an iPhone in New York, well, it's very apparent that this is a fraudulent application. So using device identity can be a very powerful tool in terms of reducing the risk of fraud and fighting the fraudsters directly at their own game. So those are a few of the ways that we're seeing institutions use device identity as well as credit data and alternative debit bureau data to improve their account opening processes.